Futures, little change to kick off the week. 30 minutes, though, until the start of trading. We're hoping to get pumped up today. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, geopolitics back in the spotlight as Ukraine's president and his European allies head to the White House. Meanwhile, central bankers are flocking to Jackson Hole, where Fed Chair Powell could signal a shift in policy, and retail earnings are on deck this week as we head into the final stretch of earnings season. It does come to an end. Katie, what are you watching?
I'm keeping an eye on shares of Novo Nordisk right now. The FDA approved Novo Nordisk's weight loss drug Wegovy to treat a serious form of liver disease. That is welcome news, of course, for shareholders, considering this stock is down about 39% year to date. They'll chip away at some of that today if this gain holds, currently up about 3.6% pre-market.
All right, from healthcare to the health of the consumer, we're going to get a look today at what tariffs have done in terms of costs and earnings from Walmart, Target, Home Depot, and more all week long. So we're going to focus in on the retailers. You can see they're moving in slightly different directions ahead of the start of trading on this Monday. But this is going to be a very busy week for retail numbers, Katie.
Absolutely. We'll dig into all of that coming up. But let's get back to geopolitics. Ukrainian President Volodymyr Zelenskiy and his European allies will be at the White House this afternoon to find out what President Trump learned at his summit with Vladimir Putin. A deal, however, not in sight.
I believe we had a very productive meeting. There were many, many points that we agreed on, most of them, I would say, a couple of big ones that we haven't quite gotten there, but we've made some headway. So there's no deal until there's a deal.
Let's bring in Bloomberg's Anne-Marie Horton, our chief political correspondent, co-host of Surveillance, and a lot of pomp and circumstance with little in terms of results, right? What did the president get in Alaska, first of all, in terms of deliverables for today?
Well, a lot remains to be seen. We all left there kind of scratching our heads. It felt very awkward at the end of that press conference because this is a president that has a propensity to want to take questions, to want to brief the press. Vladimir Putin spoke first. He talked about there were agreements. He also talked about the fact that in this meeting, it went beyond just Ukraine. He said he wanted the U.S. and Russia to get back to more pragmatic and a more business-like approach. And the president was really clear, though. He said there's no deal until there's a deal. And he put a lot of weight on the fact that he had to go take these conversations that he had with Putin back to his European counterparts, and most importantly, to Volodymyr Zelenskiy. Not just did he brief them, but now you have these European leaders descending on Washington, D.C., as well as President Zelensky. But then throughout the weekend, we got a little bit more details because Secretary Rubio went on the Sunday shows, as well as Ambassador Steve Witkoff. And it seems like there's two basically paths at play. One, there needs to be a serious discussion about territory, and this is really the third rail when it comes to Ukraine. Are they willing to give up what Putin wants, which is all of the Donbass? And it's not just the land that Ukraine currently holds, most notably about 25% in Donetsk. It's the fact that they've been able to fortify three major cities to actually have a defense posture. Without that, it's pretty much wide open if Russia wanted to have another incursion. Then the other big takeaway is going to be security guarantees. Steve Witkoff talked a lot about this over the weekend. What does this, like Article 5 NATO security arrangement, actually mean? What is the U.S. willing to give? This is interesting because this was the conversation Zelensky wanted to have 6 months ago when he was in the Oval Office and they had that huge blow up.
And I have to imagine that security guarantees from the part of President Zelensky will be the big topic of conversation, as you say. When it comes to U.S. involvement, what messaging have we gotten from the president when it comes to that topic?
Well, this is the issue. We need the details. If it's not going to be NATO, what does NATO like Article 5 actually mean? The fact is, we don't know yet. Even his own aides were talking about these are concepts of a plan, ideas of a plan. It was floated months ago by the Italian leader, Giorgia Meloni, who's going to be there in the room. Can they get to an agreement where Zelensky feels like it is enough an insurance that he can take this back and basically give a concession potentially when it comes to territory and land, which is going to be really challenging for him to accept. and then bring back to the Ukrainian people. Does it mean American boots on the ground? Likely not. But also you have to think there were security assurances or guarantees or agreements in the past. There was a Budapest Memorandum in 1994. There's been a number of Minsk agreements. It actually hasn't stopped in terms of Putin's incursions on Ukraine.
Important context there. Hoping to get more details this afternoon. That is Bloomberg's Anne-Marie Hordern, fresh off a trip to Alaska. Traders will also have their eyes on Jackson Hole this week, where Fed Chair Jerome Powell is set to deliver his annual speech on Friday. Here to take a look at the week ahead is Michael McKee. He is Bloomberg International Economics and Policy Correspondent. He joins us from Jackson, Wyoming. So, Mike, you think about the stage of Jackson Hole. This is an opportunity that Fed chairs often take to make policy pronouncements. It's also Jerome Powell's last speech as chairman of the Federal Reserve. What are we expecting on Friday?
Well, we're not exactly sure. Originally, the thought was he would unveil the changes the Fed is making to its framework of how they look at monetary policy. But now there's this added aspect of, are they going to cut rates in September? The Fed has wanted to keep their options open. So Powell may not go so far as he did last year when he said it was time to cut rates, and the markets took off at that point. Because if they get to September and we have inflation rising, and they still have poor employment numbers, the Fed's going to be in a dilemma. So he doesn't want the markets to lock in on a rate cut, but he does want to give some hope that the Fed is aware of what's going on in the economy. It'll be a tightrope for him to walk.
All right, Mike, thanks very much. Mike McKee, we're going to be checking back in with you a lot this week out of Jackson Hole. This week is also going to be a very busy one for retail earnings. As I said at the top, Home Depot reports, Target, Lowe's, Walmart, all of them out this week. The results will shine a spotlight on the health of the U.S. consumer, important to those at Jackson Hole as well. Joining us now here in New York City's Bloomberg stocks reporter Matthew Griffin. So, Matthew, what are we hoping to learn specifically about the consumer in these reports?
It's worth thinking about the context that we're in here, which is that corporate earnings growth kind of broadly has held up really well this quarter. At the same time, there are reasons to believe that the full impact of the tariffs that have gone into place has not been felt yet. So investors are looking for signs of where we're going, and we could get some of that out of these reports. There's a few things. One, are consumers continuing to spend, or are they pulling back? Two, are they trading down to cheaper goods because they're under pressure? And three, really crucially, are companies eating the impact of tariffs themselves? Are they paying those costs, which could weigh on their margins? Or are they passing them on to the U.S. consumer, which could just pile on more pressure?
Well, that is the big question, right? Across industries, but it's particularly urgent when it comes to some of these retail names. We have heard from some companies in this sector already. I think about Tapestry, for example. What can we extrapolate out from what we've already heard into what we're going to get this week?
So I think all we can say really broadly is we may be in for a little bit of volatility. I mean, Tapestry, investors punished them after they said that tariffs would hit their bottom line. If you think about retail kind of broadly, Advance Auto Parts, similar commentary, similar reaction. At the same time, not all of these companies they function the same, and that's worth keeping in mind. So your companies that sell staple goods, your food, your toilet paper, are a little bit more insulated. Walmart's in that category. It's worth keeping in mind, too, at the same time, that some of those companies are priced to reflect that. Walmart is an expensive stock, so the upside could be limited there. But yeah, again, we could just be in for some volatility, even if things are strong in a general sense.
Absolutely. And it's important to keep in mind, like you said, we can't paint with a broad brush here. There's a lot of idiosyncrasies. Why did I say that word? That's a hard one. Anyway, there's a lot of nuance. Matt Griffin, great preview of the retail earnings we have.
Idiosyncrasies.
There you go. You can be in charge of saying that word from now on. We do have some breaking news. We mentioned Novo Nordisk at the top of the show, and we just got this news at 9 a.m. that the pharma company is partnering with GoodRx to offer its GLP-1 drugs, Ozempic and Wegovy, for $500, $499 to be exact. That is half the list price. You can see the stock is rising on the news here. We know that, of course, the price tag on these drugs.
It's so fascinating that they've made it seem like that's a deal. So, but you're still paying essentially a car lease, right, to get these drugs.
Yeah.
And probably you know, not even a few milliliters are costing you $125 a week.
Well, I have great news for you and for our viewers. We're going to speak with Wendy Barnes. She's the GoodRx CEO on this news later on in the show at about 10:10 a.m.
Yeah, I'm very much looking forward to that.
Yeah, it should be a good conversation. Let's quickly check on futures here in the pre-market. It's a brand new trading week, and we are about 20 minutes away from the opening bell. There wasn't too much movement when we checked about 10 minutes ago. It's pretty much the same conversation. Right now, the S&P 500, the NASDAQ 100, down slightly in the pre-market trade. The Russell 2000 peeking into the green here, but not too much action. But we know it's a very hefty week on the earnings front, the geopolitical front, and of course the economic front as well.
Yeah, that's right. We have Palo Alto earnings coming up. They should provide shareholders more detail about the $25 billion deal for CyberArk. And then, of course, all the consumer news that we talked about, Jackson Hole, geopolitical. There's a lot going on that you don't see in the little movement of the indexes. This is Open Interest. Let's get now to high interest. Look at what's making headlines around the world. United Health is extending its Friday rally. The move sparked by a filing showing Warren Buffett's Berkshire Hathaway bought 5 million shares in the quarter. David Tepper's Appaloosa Management also bought shares, 2.3 million to be exact, in United Health. Soho House has agreed to go private in a deal worth $2.7 billion. The members club said hotel owner MCR and its CEO will buy outstanding shares not held by certain shareholders for about $9 each. You can see the shares trading at $8.88. That's got to be good luck somewhere. Buyout firm Thoma Bravo is also in talks on a take private for Dayforce, a human resources management software provider. Sources telling us here at Bloomberg that a deal to take the company private could be announced as soon as in the next few weeks. And you can see those shares up 24%. Katie?
All right, Palo Alto out with earnings after the bell today. You have shares up nearly 2% this year. That's just about flat as investors await more details about its $25 billion bid for CyberArk. Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, says that the deal could drag on operating margin, but help competition against Amazon, Google, and Microsoft. I'm pleased to say that Mandeep joins us now. So talk us through that, because yes, that's a very big price tag, but it seems like when it comes to the fundamentals of the company, that this acquisition will certainly help there.
It will. And look, when it comes to security, what we
seems like we are losing Mandeep, which is a bummer because it'd be interesting to get the lay of the land here.
Yeah, I think it also tells you just a lot about the state of technology. We have all of these incredible tools. We have large language models that help us do so much, and we can't get internet routers that work.
I know, and it speaks to the benefits of being in the office and that organic conversation.
There are so many more benefits I could speak to on that front.
Yeah.
You know, I was looking for people in the office today because I want to collaborate on stories.
I know.
And everybody's seemingly working from home. Katie says it's a Monday, as if that's an excuse. It's still a weekday, right?
It's a Monday in August. People trickle in. You know, it just takes a while. Maybe they're not there at 8 a.m. on the dot. But when it comes to Palo Alto, we'll have to see. We'll get more details about what exactly their plans for CyberArk are. We know that at least Wedbush says that this is one of their top cyber picks for this year. So it'll be interesting to get those details. But
you know, I'm going to just watch the close at 4 o'clock. I guarantee that Romaine and Scarlett and Carol and Tim are going to be breaking those earnings line by line.
Yes, you know
as they
will.
cross. So waiting for Palo Alto, checking on what's going on in futures this morning as we try to get going on this Monday. It's like we're robo-dosing through the mud here. Right now, looking at S&P futures down 0.1%, NASDAQ futures not moving a whole lot more, and Russell futures even less. So, I get this feeling that there's so much happening, but there's nothing coming out of it, like the Alaska meeting between Presidents Trump and Putin.
Well, that's the thing. For all of the things that we're looking forward to this week, we're really in wait-and-see mode right now. We know we're going to get a very interesting read on the consumer and some of those reports, especially on Walmart. That's not until Thursday. We know that Jerome Powell is going to be interesting in some fashion. We don't hear from the man himself until Friday. And then when it comes to what's going on the geopolitical front, it's another wait and see. We know that the European allies are gathering at the White House this afternoon. We're all waiting for details on what exactly happened in Alaska, but we're just going to have to hang tight. And that's maybe why you see such muted movements in futures.
And I guess it's easy enough to do when you're hanging out at all-time highs, right? On stocks, on Bitcoin, risk assets just are really, I don't want to say frothy, but higher than we've ever seen them. Well, maybe there's a new multiple that we need to be thinking about here. Coming up, we'll talk about that with JoAnne Feeney of Advisors Capital. She says some consumers could see tariffs impacting prices by up to 80%. We'll ask what areas of the retail economy she's watching. This is Open Interest.
Goldman Sachs says that U.S. profit margins are capable of withstanding President Trump's tariffs after more than half of S&P 500 companies actually raised guidance for the year. The team led by David Kostin says, quote, "While we expect companies will be generally able to mitigate tariff costs and maintain their profit margins, the magnitude of margin expansion embedded in consensus estimates appears unrealistic." Let's bring in Advisors Capital Management portfolio manager and partner JoAnne Feeney. JoAnne, great to have you with us. Let's talk a little bit about margins here, because I think for a lot of folks that, okay, this earnings season was better than feared. You see margins holding up. Who's eating the cost, though, of those higher input costs?
Yeah, good morning, Katie. We don't know just yet, right? We've only seen some smaller tariffs start to come in, and we're certainly seeing the producer price index reveal that we're seeing some pass through, but not yet as much to consumer prices. You really have to look at it company by company. Companies that face little competition are going to be able to pass through more of the tariff effect. They may also be able to pressure their suppliers. But when you look at, whether it's a retailer like a TJ Maxx or a Target or a Walmart or something like a Home Depot, when you drill down and look at their operating margins, they're just not that big. So there's going to be limited ability for them to absorb a lot of the tariffs, which means they're going to have to pass through a fair bit. But consumers won't stand idle when that happens. Their demand will likely drop. So companies are going to have to feel it out and see how much they can get away with.
But there's no chance of, in your notes, you talk about what percentage of that increased price that companies pay is going to be passed on to consumers. And unless a company is selling like rare earth magnets, they're not going to move prices up substantially, right? Certainly not 80%.
Yeah, that's right. The estimates so far, based on, I think, prior research on other tariff events, has been that there's about a 30% pass through. Tariff increases prices by $10. The consumer pays an extra $3. So we will see, whether that's the case this time, because partly the research is based on, more moderate tariff increases. We're kind of in a new world here. We haven't seen this level of tariffs since, Smoot-Hawley. So it's been a really long time. So the data is simply not that rich in terms of telling us what's going to happen. And of course, when you drill down, it's going to depend on, are there substitutes in the U.S.? Are there, demand environments that are really sticky, that are inelastic? And if demand is inelastic, then sellers can get away with a much higher pass-through rate, much higher price increase. And so it's really going to be good by good, company by company.
Well, but if we only see, on an average basis, if we only see prices increasing by 2.5% or less than 3%. For economists and certainly for the Fed, that's great. But for consumers who continue to see these price increases adding on top of price increases, like at some point, you're just too far stretched, right? Or have wage increases kept up?
That's exactly the question, Matt. And consumers, as you pointed out, many households are already pressured by the past inflation from the COVID pandemic and the immediate, aftermath. So that's why we like to think about the consumer not as this one big aggregate and just look at averages. You've got to break down the consumer into lower income, mid income, et cetera. And the ones sort of in the lower half of the income distribution are already pretty stretched. They're not going to be able to take more price increases. And so their response will be simply they have to tighten the belts. They're going to be able to put less in their shopping cart to take home. That decrease in aggregate demand means firms in that space are going to end up selling fewer goods. Their nominal revenue will probably hold up just fine, but their margins will probably shrink as a consequence.
So, JoAnne, if you're investing in that space, it sounds like there's a lot of due diligence that's needed to make sure that you're actually investing in the right companies here. I mean, how does this period compare to maybe where we were a year ago, 2 years ago, or even during the pandemic?
Yeah, so during the pandemic and the immediate aftermath, right, we're seeing recovery in consumer spending. We were seeing consumers with very healthy balance sheets, excessively healthy in some ways because they paid down a lot of debt. And so we were able to figure out, okay, what goods did they miss out on during the pandemic? What do they need now to buy? And they were pretty flush. When inflation hit, belts got tightened. That's when we became worried about the lower income consumer and the mid-income consumer. And so we shifted, the sort of stocks we held. We looked to companies like TJ Maxx, right? The place to go for bargains, but with high quality. And so we continue to expect that company to do well, even as consumers continue to have to tighten their belts here a little bit. Also, though, higher end consumers continue buying. Their income and their wealth has continued to grow as real estate prices have gone up, as the stock market has gone up. So a higher end consumer discretionary company like, say, a Williams-Sonoma is continuing to be pretty well positioned in this environment.
All right, JoAnne, hold that thought. We are just getting started. JoAnne Feeney sticks with us through the opening bell. The setup doesn't look too inspiring, but I promise there's a lot going on under the surface, and we'll bring you all that action up next. This is Open Interest.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at the index futures, not doing a lot right now. S&P futures and NASDAQ futures both down. The small caps gaining just a tiny little bit. And there's really not much going on. We don't have a publicly traded stock ringing the bell at the New York Stock Exchange. It's the Make-A-Wish Foundation, which is great. And then you have CTW, Cayman, ringing the bell on the NASDAQ marketplace, which is like some kind of gaming platform. They've only been trading for 8 days, and they've already lost 60% of their value. So I hope you didn't buy that IPO. Katie, what have you got? This is actually an interesting story here.
Yeah, bring the camera over here because we actually have a lot to talk about. The FDA, it approved Novo Nordisk's weight loss drug Wegovy to treat a serious form of liver disease. That news came, I believe, at the end of last week, which is exciting, but also exciting coming this morning, the news that Novo is partnering with GoodRx to offer its GLP-1 drugs, such as Ozempic, such as Wegovy, for $4.99 for cash-paying patients. That is half of the list price. You can see shares reacting in a big way. Novo up about 4%, GoodRx up 24%. And good news, we're talking to the CEO of GoodRx, Wendy Barnes, in the next hour. Matt, really looking forward to that conversation.
Yeah, so to be clear, you can use a credit or debit, right? It doesn't have to be an actual cash transaction, but the idea is you don't go through your insurance.
Yes,
and then you only have to pay $500 a month.
$4.99.
For like a milliliter of drugs. All right, investors will get clues about the health of the consumer and potential tariff pass-throughs with earnings from Walmart, Target, Home Depot, and more. We've been talking a lot about it. We're back with Advisors Capital Management Portfolio Manager and partner JoAnne Feeney. And I guess the health of the consumer is so important right now, but I'm thinking more about multiples because the market is trading at a very high multiple, at least historically. If you look back, 21, 22, 23 is not normal. I heard someone on Bloomberg Radio this morning say, but the fact is we don't have, an entire index full of manufacturers. Like, these are very different businesses that we're grading here, JoAnne, big growth businesses. How do you think about multiples?
Yeah, there's no question at first blush the market looks pretty expensive. It is 22.5 or so times. But to your point, Matt, the index is dominated by these big growth companies, not just growth companies, but companies with significant, what we economists call economies of scale, network effects. These are companies that have strong complementarities in their products and also get better as more people use them. And so it's natural that they have become so large, but more importantly, can get larger because of the growth of the services that they offer, the products, whether it's data centers and the growth of AI, and that's just in the early innings. So you look at a company like NVIDIA. Yeah, it's expensive. It's at the top of the market or near the top of the market, and it's going to pull up that average for the S&P. But dig deeper, and you can find some value out there. And that's really the important job for a portfolio manager like myself. We're selecting 40 or 50 equity positions for client portfolios, whether they be a growth portfolio or we're looking for growth at a reasonable price, or whether it's a balanced strategy where we're looking to take a more conservative approach and drive higher dividend yields into client portfolios. So you can find what you need. You just don't want to invest in the index as a whole because it brings the good, the bad, and the ugly into client portfolios if you do it that way.
That's an interesting approach, JoAnne, and I really like portfolio managers who pretty much invest in a high conviction list. 40 names, that's certainly something you need to have conviction in. So you mentioned those different buckets that you tend to look at, those different types of portfolios that you might be investing for. Are there any names or types of companies that actually fulfill all those different buckets?
Well, almost all of our strategies on the equity side hold Broadcom. We've held it in growth and balance since about 2015 when I first joined the firm. It's a name I covered when I was a semiconductor analyst for all of the years since its IPO. We like that stock and that company for several reasons. One, it has diversified end markets. It is number one or number two in each of the markets in which it plays. It has very strong margins. That is a deep moat that protects their profits going forward. It isn't looking to be the fastest growing company out there. In fact, when an area of their business grows really rapidly, it becomes too big a part of the business. Hock Tan, the CEO, goes out and buys another company in a different space so as to diversify. So it brings together a lot of positive attributes. Started out with a high dividend yield, but the stock has appreciated so much, it's now one of the lowest yielding companies in our balanced strategy. But still, it's a really solid core holding. It epitomizes the type of growth that we're looking for. It's exposed to AI, it's exposed to smartphones. But it's also diversified, which really helps.
What do you think, JoAnne, about software companies? Because there's been a lot of talk about the fact that AI is going to eat their lunch for almost all of them, right? But some are doing so well. Palantir, for example, is trading at over 100 times sales, forecast sales for this year. So which software companies are going to survive this?
Yeah, Matt, it really depends on what you think about as software. Obviously, Microsoft is a software company, and they're right in the middle of the growth of AI and enabling lots of firms and consumers to make use of AI. So you have to dig deeper. Companies like ServiceNow are bringing AI capabilities into the capabilities they provide their customers. They're likely to be and continue to be a winner in the move over to AI. And other companies in software may be able to reduce their costs because AI is enabling them to do some coding on the cheap, as opposed to having to hire lots more coders. So it's really far more nuanced than I think the surface look suggests that it is. There's going to be a lot of winners in software. There's going to be a lot of places where AI makes it more efficient to develop software. So maybe we get some disruption in some of the leaders out there because AI makes a new software tool easier to develop and launch. So it's just complicated, and that's why you have to do an awful lot of work to find the companies, I think, like ServiceNow, that'll ultimately be a winner.
JoAnne, I'd love to talk about how monetary policy and interest rates specifically factor into your stock selection. We have a big event at the end of this week in the form of Jackson Hole. We'll see if Jerome Powell actually decides to rock the boat there. But how do you think about those different cross currents coming in when you're weighing some of the different factors on the company-specific level?
Yeah, so we do take first a top-down approach here at Advisors Capital. When we're looking at stocks to pick, we look first what's going on in the macroeconomy. What is that interest rate outlook that we have? And then we do the bottom-up detail work company by company to pick the best opportunities given that macro environment. And right now, we've been fairly consistent in our view that we didn't see a recession coming when many others were worried about it. We did see interest rates remaining higher for longer. At this point, given the weakness in the labor market that we most recently saw, and a fair tameness, if that's a word, in prices for now, we do think it's likely that the Fed cuts 25 basis points at the next meeting, but we don't hang our stock selections on this. We expect that equities will be driven more by fundamentals. That is, what earnings rate of growth can they deliver over the next several quarters and years. And we pick those 40 or 50 names based more on fundamentals, with the backdrop that ultimately inflation is under control, even if we do get a spike that lasts for some time because of tariffs, and that the Fed will keep a careful eye on that. It'll probably limit the amount that the Fed can cut rates, so we're not looking for a big surge in equities from drastic rate cuts anytime soon.
All right, JoAnne, great to get some time with you on this Monday morning. That is Advisors Capital Management Portfolio Manager and Partner, JoAnne Feeney. Meanwhile, we're about 8 minutes into this Monday morning trading session. Let's take a look at the market right now. Boy, you look at that and it seems like there's not too much to talk about because the S&P 500 almost perfectly unchanged at this moment. But you break it down into components, it gets a little bit more interesting. You have fewer gainers than losers right now. Up at the top of the board, Nvidia, Microsoft, Alphabet. You would think that would be enough to push us to a gain, but then you take a look at some of the biggest losers this morning. Here's the reason why. You have Meta, Amazon, Intel, Broadcom, all lower this morning. So those big tech names really fighting each other, and the index ends up unchanged. Take a look at the sector look as well. Also an interesting picture because up at the top, you still have tech higher. That is your biggest gaining sector of the morning, up about 0.3%. We know that healthcare is having a good morning. When it comes to Novo, when it comes to GoodRx, we'll continue to talk about that. You go down the list and you do start to see some more material downward moves. Materials down about 0.2%. Communication services off by 0.9%, and energy having a really rough start to this trading week. That sector off about 1%. Matt Miller.
Yeah, that's interesting because I know that Dan Ives actually added GE Vernova to his Ives 30 AI index. So, and that got me thinking a lot more about energy, electric power. But I guess the market needs to kind of wake up to that on this Monday morning.
It's Monday.
It certainly is. Coming up, Novo Nordisk is slashing the cost of Ozempic for cash-paying patients. Only $500 a month to get a shot a week. More next. This is Open Interest.
Welcome back to Open Interest. Let's take a look at all this nothing going on in markets right now. Just a couple minutes into the Monday morning trade. The S&P 500 and the NASDAQ 100, the color is red, but only by a little bit. We're only down slightly when it comes to your big benchmarks. The Russell 2000, this had been your outperformer in the pre-market, up slightly. It's still up slightly if you're an optimist, but pretty much unchanged across the indexes right now ahead of a very consequential week. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, we have Sunrun upgraded to outperform at RBC. The analyst over there cites new guidance on what is considered beginning construction for clean energy projects, trying to qualify tax credits. A lot to think through there, but shares up about 13%. Next up, we have Duolingo with an upgrade to overweight over at KeyBank. Justin Patterson, the analyst over there, he says that price optimization is a growth lever that has been underutilized. Shares up almost 8% on Duolingo. And finally, Argus Research initiates Reddit with a buy rating. The analyst says that while Reddit's valuation is expensive, its growth runway is promising in the near term. Reddit shares up about 1.5%. We also want to keep an eye on healthcare because Novo Nordisk offering Ozempic for $4.99 per month for cash-paying patients. That news dropped this morning, and it follows the FDA's approval for Wegovy to treat liver disease. Let's wrap it all together with Bloomberg Health reporter Madison Muller, who joins us now. Let's talk about what's going on with the GoodRx partnership, because you can see that is sending shares absolutely flying this morning. What does this mean for Novo? What does this mean for GoodRx?
I think it's seen, on the backs of this Wegovy approval last week that happened late on Friday. Novo has had a rough start to the year, and this is sort of the the good news that they needed to get investors excited again about what the company is doing. I mean, it's been losing out a bit to Eli Lilly's drug Zepbound. And so what this really shows is that Novo's trying to get back into the market. They are making some strategic moves to, one, get their drugs to more patients, to sort of this I'm thinking of it a little bit actually as like a 1-2 punch. We've seen the Trump administration wanting to lower drug prices, asking companies to lower their drug prices. And so sort of on the heels of that, we are seeing Novo come out and say, Ozempic, which is probably the most best known drug right now, we're going to lower the price for cash paying patients. At the same time, fighting off some of the competition, both from Eli Lilly and from the compounders that have been eating away at their sales.
It's still not very low. I just want to remind everybody, it's still at $500 a month. If you're on the maximum dose of 2 milligrams per injection, that's like $65 per milligram, and gold costs 10 cents per milligram.
Thank you.
So the compounders, I guess, are the better comparison, right? I'm seeing on my Instagram feed $119, $99. Now, these may be for smaller doses, right? And it's a compound, not the brand name drug. But can they really fight them off with, still the cost of like a nice Hyundai car lease?
Right. I mean, it's interesting because patients who are on Ozempic is Novo's diabetes drug. Wegovy is the obesity drug. And there isn't really as much of a cash pay market for diabetes drugs because if you have type 2 diabetes, your insurance, and you are on insurance, it's usually going to cover Ozempic or another diabetes treatment. So this move, Novo said, I think they said that there's like 98% coverage for Ozempic already. So there aren't that many patients who aren't able to get Ozempic, and $500 a month is still a bit expensive when you have insurance coverage for the drug. So they just, I think, are trying to expand availability as much as possible so patients, no matter what, can go and get the real, authentic, FDA-approved Novo Nordisk medicines compared to the compounded drugs.
And when it comes to expanding access, talk us through how this is maybe similar, how this is maybe different from what Novo is already doing with the likes of CVS, for example.
Exactly. So Novo already launched cash pay, cheaper Wegovy back in March for the same price, and they have deals with CVS to allow customers who go to purchase their drugs at CVS to get these drugs for $500 a month. They also offer those cash pay drugs through NovoCare, which is their cash pay pharmacy. And they have partnerships with companies like Weight Watchers, where people who go through Weight Watchers can get Wegovy for $500 a month already. And so this is the first time that they're launching this cash pay version of Ozempic for the same price. And they're also expanding that partnership, the partnership that they have to GoodRx.
And, at the start, you mentioned the comparison between Novo Nordisk and Eli Lilly. You can see that really starkly when you take a look at shares over the past year, over a year-to-date look here. When we think about that sort of duopoly that they have over the GLP-1 market, I have to imagine that Novo is doing all that it can to close that gap, and that the news that we got this morning, also the news that we got when it comes to being approved for liver disease as well, will probably help close it.
Exactly. Yeah, Novo is clawing its way back into the race with Eli Lilly. Lilly has had a not so great couple of weeks. Investors were disappointed about their obesity pill orforglipron, some of the late stage data that we got recently, whereas Novo's had some better news over the last week or so. And so, they're neck and neck right now. They're continuing, both of them, to do everything that they can to stay ahead and keep their edge in this obesity race. It's expected to be a $95 billion market by 2030. So there's a lot at stake here. And right now, it seems like Novo's having a good week. They have a new CEO in there. And so some of these moves also might be him sort of trying to make his mark early, but we'll see.
I'm looking at a 2025 Ford Bronco Big Bend, a four-door at Dorian Ford in Clinton, Michigan. $499 a month, 0 down for a 36-month lease.
You would probably be looking at that anyway, though.
No, I'm just saying, that's the price that Novo Nordisk wants for 8 milligrams of Ozempic.
It's a hot commodity.
Thank you very much, Madison Miller, for joining us. Madison covers healthcare and the GLP-1s for us. Don't miss our interview, by the way, in the next hour with GoodRx CEO Wendy Barnes. She can help answer some of these questions. Why would they make a deal for a drug that's already covered 98% of the time by insurance?
Stock is up 28% though, so someone thinks
that's
it's
why.
a good idea.
Retail reports also coming out all week long, as we've been telling you. Walmart, Target, Home Depot, Lowe's, all posting earnings this week. We'll take a look next at what to expect with Red Brown. This is Open Interest. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check of what stocks are doing to kick off the week on this Monday morning. You're not seeing a lot of movement here in terms of size, but the direction is red for the S&P right now, still at 64.45. It's pretty darn high. The NASDAQ coming off 0.2%, also from all-time highs, so not a huge loss. You do see the Dow Jones Industrial Average creeping up there a little bit, 44,950. I just point that out for Katie, who watches the Dow so closely.
Thank you for that.
In terms of the big stocks that we're watching, they're up. So, you know, NVIDIA up 0.75%. That should be a lift on the S&P. It's not doing much good right now. Apple gaining 0.25%. We're going to talk about this Novo GoodRx deal with the CEO of GoodRx. You can see her stock up 35% in one day. Amazing move. And we're going to talk right now about some of these retailers, some of the biggest in the world. Walmart reporting, Target reporting, Lowe's, Home Depot, etc. Katie has got Red Brown on that.
Yeah, just an embarrassment of riches to talk about with Red Brown. He is our Bloomberg earnings specialist. So more than 90% of names in the S&P 500 have reported earnings. But when it comes to the check on the consumer, this is the week that you want to pay attention. And I have to imagine that Walmart is the star of the show.
Yeah, absolutely. Especially, I think this week is a kind of especially a highlight just because of all the data we got last week on the consumer. Kind of a mixed report between, we saw retail spending wasn't accelerating, or at least a little bit, but we saw that mixed report from the University of Michigan on the consumer sentiment kind of getting worse as well. So with Walmart and Target as well, we'll get to see whether or not people are really spending discretionary dollars on, you know, whatever it might be. And yeah, for Walmart especially, the view will be that still consumers are seeking value. They're, you know, going to Walmart for the lower prices that Walmart have been introducing to kind of get people into the stores, whereas Target, kind of the prevailing narrative has still been that the discretionary spending is down. We'll see if any of the price changes that they've been doing and implementing through the quarter have done anything to kind of gin demand back up. But so far, the prevailing narratives from the last few quarters have kind of continued into this quarter as well.
Is the idea that Target is a slightly more affluent customer than Walmart, or a slightly higher price point than Walmart, and they're moving down from Target to Walmart?
I think with both of these companies, it's kind of like the average American, right? Like, it's not, you know, you get a full spectrum. You have people that are very wealthy going to Walmart, believe it or not, and people that are not so wealthy as well getting in there. So I don't think it's so much of a trade down story. It's just more of what they have on offer. If you go into a Walmart store, it's basically a grocery store at this point, right? You know, most of the times people are walking out with giant carts full of you know, eggs and whatever else they need for the week, whereas Walmart, if you go in, it looks more like a clothing store still. So I think it's getting that assortment right is probably starting to drive the results to Walmart more, or the foot traffic, excuse me, to Walmart more than Target. But again, Target is adjusting. They're trying to catch up. Unfortunately, right now, the expectation is that they will contract by around 3 points. Their sales will contract by around 3% again this quarter. We'll see if maybe there is some room for them to perform a little bit better than the expectations at the moment.
All right, Red Brown, great to get the preview with you. That is our Bloomberg earnings specialist. Really interesting point. When it comes to Walmart, sometimes underappreciated or forgotten that grocery presence is huge when it comes to Walmart.
Right. I actually spent time in a Walmart recently.
Did you?
And I walked around. Before I went to the groceries, I got myself a buck knife.
As one does.
And then I went over and got the eggs that Red was talking about there. Coming up in the next hour, Marija Veitmane joins us from State Street. She talks about the easing resolution of trade issues that we've been seeing, plus GoodRx CEO Wendy on that company's new cooperation with Novo Nordisk. We're going to talk about Ozempic for $4.99 a month. We are 30 minutes into the trading day, looking at red arrows on the equity indexes, and the 10-year yield not doing anything at all at 432.18. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. And coming up this hour, geopolitics back in the spotlight as Ukraine's president and his European allies head to the White House.
Meanwhile, central bankers apparently flocking to Jackson Hole, where Fed Chair Powell could signal maybe a shift in policy.
And it's his final address at Jackson Hole, so that will certainly be interesting. But we also have retail earnings on deck this week as earnings season heads finally into the home stretch, even though it never truly ends.
It does.
It doesn't end.
I feel like it ends at some point.
No.
Others just trickle out after the season's over.
Then it never ends. Anyway.
Goldman Sachs says U.S. profit margins are capable of withstanding President Trump's tariffs after more than half of S&P 500 companies raised guidance for this year. The team led by David Kostin says, quote, while we expect companies will generally be able to mitigate tariff costs and maintain their profit margins, the magnitude of margin expansion embedded in consensus estimates appears unrealistic. Unrealistic. Wow. Joining us to talk about this is State Street Global Markets Head of Equity Research, Marija Veitmane. Marija, great to see you. As usual, you brighten up my day. What is your bullish take on this unrealistic earnings appearance?
Yeah, hello. I mean, to brighten up your day, I think I think there is a huge divergence in terms of earnings expectations. So there is there is my favorite tech sector with fantastic earnings expectations and high. Actually, let's put it this way: earnings expectations were high for Q2, actually Q1, and all of last year. Companies managed to exceed them, guided higher. So that's a really good, very strong story. And there is the rest of the market where earnings expectations were quite low. Companies managed to beat them, but guided lower. And we're having kind of falling earnings expectation. So on average, it looks okay, but it's really kind of bimodal distribution where you have some really strong parts and some fairly weak parts. So I think talking about averages is a little bit misleading, but if you're looking for good stories, tech earnings expectations are fantastic, and we expect them to meet them.
That's really interesting, Marija, that, okay, the macro side, you do have a lot of cross currents, a lot of questions. The micro side, things look maybe a little bit brighter there. You net it all together, it comes out kind of neutral. Where's the stronger signal right now? What is this market actually moving on? Is it the macro or the micro?
I mean, that's a really good point, Katie. So you have this kind of beta stories, which is kind of your macro, okay, things are not, I mean, our fears that we had at the start of the year maybe not realizing, so trade kind of negotiations, and we're finding some trade deals, and kind of overall global economy is not stopping, and there's like rates potentially coming down. So that's your beta story, so kind of better tides lifting all boats. But if you look at where the relative winners and losers are, that's definitely micro stories. That's better earnings, but better earnings expectations. And if you look, like say for example, since the trough of the market, kind of 9th of April, which sectors, which styles, which countries done better? It's the ones where earnings expectations for the whole year has held up better or been upgraded. So your tech, your communication, your growth, your US done a lot better than Europe, than small caps, and values, and energy and materials, where we saw a lot of downgrades. So yes, there is beta story, everything going up, but within that, micro and earnings stories are really, really important, and I think investors should really zoom in on those.
Marija, we had a guest on the close last week, Ankur Crawford, who warned, and I've heard this warning before from others, that a lot of these software solutions providers are doomed because AI is going to be able to, do the same things for far less, essentially eating their lunch, and many of them will just go out of business. How do you see that panning out?
I mean, I'm a big believer in kind of mega cap tech. I mean, our view is that AI, okay, cost of running AI is coming down. We've seen kind of software innovations, but still, it's really, really expensive. So barrier to entries into that industry are still very high. It needs enormous amount of capex. It needs enormous amount of infrastructure investment. So it's really about large cap tech. So that's your kind of market winners over last few years, and we expect them to stay there. So it's really
how many, Marija? How many? Because we talk about the Magnificent Seven. Katie always mentions, I think rightly so, that Broadcom is also massive and gains a ton. So maybe it's Mag 8. Dan Ives has an index of 30 AI companies. How many do you see that are really investable?
I think I'll go to 7 or 8. I think that's really the scale. As I said, it really needs to be a huge company to be able to afford AI and kind of first mover advantages and network effects. They're really, really important. It's really difficult to compete with those companies. I mean, normally we see things like, I mean, there is a huge war for talent in tech sector, and like we look at those astronomical salaries like offered to like top talent. And I mean, it really tells you that you really need to be in the game very quickly, very fast. And it's very difficult to compete with those behemoths.
Yeah, absolutely. Meta with some eye-popping packages out there to hire new talent. But Marija, you think about the valuations and where we are in this exact moment. Is now the time to buy into tech, or is this more of a hold it if you have it sort of moment?
I mean, I have to say it's really difficult decision or difficult kind of message to tell investors you still have to buy into tech. And I think the way I think about current market and current circumstances that we have those, say tech companies, Max 7, who are fantastic companies, really strong profitability, strong growth, but they're really expensive. And also like very crowded. People already build up their positions. And on the other end of the spectrum, you have your small caps, you have your value, you have your kind of European stocks, which have real underlying profitability problems, but they're extremely cheap. And then investors have this choice. Do I buy expensive companies with fantastic earnings, or do I buy companies on the cheap, with weaker fundamentals? And I think until we see any signs of improving earnings outlook in those laggards, we really have to pay up for better earnings somewhere else. So this idea of broadening of equity rally, really, in my mind, very, very closely connected to broadening earnings. And so far, like look at this earnings season, yes, lots of companies bid, but very few guided higher. It's only really tech companies that guided higher and maintain strong earnings expectations. So unless we see broadening of earnings, you really have to go in and buy into tech. Yes, it's expensive, but it's really, there are very little other opportunities. So like this TINA trade is really kind of within equities is still kind of still true.
You are the head of equity research at State Street. Global markets, and I guess I could ask Michael Metcalf really the Fed question, but you must take a view on it as well, right? Because rates are so important to equities. Do you think that we're going to see a policy shift from the Fed at Jackson Hole on Friday?
I mean, I'd like to think no, given that, I mean, the data that's coming from US is, I mean, there is kind of something for everyone. So there is some kind of data so there is some evidence of weakness and there are some evidence of strength. So it's not like unequivocally strong or unequivocally weak. So we're kind of bumping along and there are some signs of getting better, getting worse. So I don't see a need for Fed to fight market expectations at this stage, given the data is kind of fairly mixed. So yeah, no, I don't think there should be kind of big surprises, big fireworks coming out.
All right, Marija, that's a good place to leave it. That is State Street's Marija Veitmane kicking off the week with us. I have to say, I'm excited for Jackson Hole for a number of reasons. It's going to be interesting to get an update on the Fed's monetary policy stance, but I just love the visuals. Central bankers in front of mountains, I find it so inspiring.
Mike McKee in a cowboy hat.
What could be
I'll take that all day long. But yeah, I think the most interesting thing is the tension between their two mandates. I just can't imagine that they take interest rates down so far with inflation at 3%.
Yeah,
that's burned Fed chairs like Arthur Burns in the past.
Yeah, that is a really painful history that the Fed has when it comes to inflation in this country. So we'll see, of course, what we ultimately get out of that gathering. But let's take a look at some of the single stocks moving at this exact hour. We'll do that with Bloomberg cross-asset reporter Denitsa Seikova.
Let's start with Novo. It's been the big story of the day, where, of course, we're talking about price cuts. The current price tag will be $500 for cash-paying patients. This is about half of its U.S.-listed price, and, of course, this is through their cash-pay pharmacies. The shares also advanced in earlier trading as Wegovy received U.S. approval to treat a serious form of liver disease. This is, of course, before Eli Lilly does that. The stocks are up 7% on the combination of the news. We know that President Trump has been pushing for lower drug prices, and that's definitely one of the big names that had pressure. The drug maker started the year as one of the biggest winners in Europe, but it has been a lot of pressure as the competition has been heating up. One name that is seeing a really strong day today is Soho House. The company is going private and the stock price is getting quite the lift from that. Soho House shares rose 16%. Hotel owner NCR will buy the outstanding shares not held by certain shareholders for about $9 in cash. Of course, this is a massive premium, about 80% more than what the price was in December when that deal was first announced. Of course, Soho House has been struggling, as some people are saying it's expanding very fast. The stock has been under a lot of pressure. That said, this year we're seeing a very strong gain of that offer that has been supporting the company. Another name that's benefiting from going private is Dayforce. Big jump today, more than 20%. It's coming off Thoma Bravo being in talks to acquire the human resources management. The buyout firm is planning to take Minneapolis-based company Dayforce private. Thoma Bravo has been one of the big buyers in private equity space. Of course, private equity has been slowing down, but this is one name that's been working very strong. The company, of course, Dayforce, was a big winner during the pandemic, and we've seen a lot of those software names being under a lot of pressure. So some relief there. Back to you, Matt and Katie.
All right, Danica, thanks very much. Bloomberg's Danica Tsekova from our cross assets desk. Coming up, more on Novo partnering with GoodRx to offer Ozempic and Wegovy for the same price at pharmacies across the U.S. Wendy Barnes, the CEO of GoodRx, joins us next. This is Open Interest. Let's get out of high interest. Look at what's making headlines around the world. Evercore ISI is adding Target to its tactical outperform list. The analysts there seeing potential for a high single-digit to low double-digit increase around earnings. The company is set to report the results before the opening bell on Wednesday morning. United Health is extending its Friday rally. The move, which was sparked by a filing showing Warren Buffett's, or a couple of filings. One, Warren Buffett's Berkshire Hathaway bought 5 million shares. Another, David Tepper's Appaloosa bought 2.3 million shares. And the company got a big gain on Friday, continues to rise. And Novo Nordisk is offering Ozempic for $499 a month for cash-paying patients. That news following FDA approval for Wegovy to treat liver disease. Kind of a 1-2 punch to help out Novo Nordisk, but not as much as it's helped GoodRx today. That company is the one that's going to offer the two weight loss drugs for $4.99 a month at pharmacies across the U.S., and that's why we're seeing GoodRx shares soar this morning, Katie.
And I'm pleased to say that we're joined now by Wendy Barnes. She is the CEO of GoodRx. Wendy, great to have you with us. Let's set the scene here. So as I understand it, you have Novo offering Wegovy through its own Novo Care platform. I believe they have some other partnerships as well. What differentiates GoodRx from maybe some of its peers here?
Sure. Good morning, Katie. Good morning, Matt. Thank you for having me. I think the largest difference is just the platform that exists for GoodRx. We are the #1 branded marketplace to seek cash pricing on both brands and generics. So for that reason, we largely already have the millions of consumers searching for these types of products, GLP-1s not being unique in that regard. And this is where they're looking for the most affordable price and the ability to access them. And then you throw in that we effectively work with most pharmacies in the U.S., and it just makes it much easier to obtain these products that, historically folks have really struggled to get, and additionally have struggled to get coverage if they are in fact insured.
Help me understand what you're doing here, Wendy, because if I go to a pharmacy, why doesn't Novo Nordisk give the drug to the pharmacy and I buy it from the pharmacy? Like, what are you doing here in the middle?
Yeah, so actually that is how it works, Matt. So think of us as a digital marketplace wherein we convey the pricing and the consumer experience. We then work directly with those retail pharmacies so that if you or I show up to one of those counters and you utilize the GoodRx pricing, you can get it at those pharmacies in a seamless experience at that $4.99 price point. Juxtaposed, I believe you mentioned in the opener, Novo Care also has their own program through their own direct program, which we also support in the GoodRx marketplace. But again, you can do that either through them or at really any pharmacy of your choosing. So it really is as you described. You can still show up to that counter, you show your GoodRx coupon, and away you go.
And so, of course, you have this partnership being announced with Novo Nordisk this morning. What about Eli Lilly? Are you in discussions with that company as well?
Sure, I appreciate the question. Katie, I'm not going to comment on future opportunity with Lilly. What I will say is we work with them already today to support their Lilly Direct program. So again, really any consumer that's searching for whatever GLP-1 they've been prescribed. The differentiator here, however, is again that cash price that you can really take to any pharmacy, which only Novo is offering at present. But if I back up a little bit further, look, there are a lot of other medications and therapies that also treat weight loss management in diabetic patients. Those are all available in this marketplace. GLP-1s obviously aren't the only solution, but we understand why they are, in fact, as popular and as in demand as they are today. But I would be remiss without calling out that there are a multitude of therapies available through the GoodRx marketplace.
If drug makers are selling things on your marketplace or in partnership with platform companies like GoodRx, why bother? Why do we need the pharmacy? Shouldn't they kind of go the same way as like Blockbuster?
No, that one I'm going to give you a vehement no to. So just as a reminder, Matt, we're not a pharmacy. So we're a marketplace to support the digital pricing, the consumer experience, whereby we negotiate as hard as possible to get the most competitive patient pay prices out in the market. We don't actually dispense prescriptions. We partner with retail pharmacies, mail order pharmacies, such that the consumer can really choose whatever pharmacy it is they prefer to work with. There's definitely going to be an ongoing need for pharmacies to convey that care. We know that in many instances, particularly in more rural areas, oftentimes the pharmacy is the source of care for a number of Americans.
But Wendy, I'm still not getting my big soft brain around this. Like, if Novo Nordisk is going to offer the drug for $4.99 through you to pharmacies, like, why are you then necessary? Why doesn't Novo just sell it to the pharmacy and I buy it there?
Well, think about the consumer experience, Matt. If you truly want to look into a digital asset, compare your prices, see which pharmacies have inventory.
I don't want to have anything to do with the digital asset. I just want the drug, right? So Novo sells it to the pharmacy and I buy the drug at the pharmacy with dollars.
Sure, but don't you still want to know what the price is before you show up? Don't you want to be able to?
Well, if Novo says it's $4.99, what? I don't get this sort of digital asset tree that goes on in here. Like, we're just talking about a product for a price to a consumer.
Sure, but 9 times out of 10, Matt, you're on far more than one drug, and you're looking at a multitude of things in your basket that you're hoping to get best pricing on, whether you've got insurance or not. So it's not just about one particular drug. This is about building over time as a company an ongoing repertoire, an ongoing portfolio of brands at competitive cash prices, such that you and I can shop for any drug available, whether we have insurance or not, and know that we're both getting a fair price, and additionally that we are working with pharmacies and reimbursing them fairly. Manufacturers are not in the business of working with a network of pharmacies and negotiating fair, responsible contracts with those pharmacies. That's what we do to ensure that we're maintaining a healthy network of pharmacies that also can be profitable when they're supporting the dispensation of those drugs.
All right, Wendy, unfortunately, we have to leave it there. That is Wendy Barnes. She is the CEO of GoodRx. Shares absolutely surging this morning, up about 30%. Now, coming up later this hour, we'll break down this week's retail earnings with Joe Feldman, Telsey Senior Research Analyst. This is Open Interest.
Let's get a check now on what's going on at the index level with the S&P 500. You can see we've slid higher right now, about 5 points up at session highs here with the breadth which is fairly evenly split, but to the upside. So 271 stocks gaining, 228 to the downside. We're looking at it in terms of point additions. Obviously, NVIDIA adding the most, then Tesla, then United Health as that story continues. In terms of the big losers, you've got Meta Platforms down. The information out with an interesting story that Meta is splitting its artificial intelligence unit into 4 groups. So maybe that's part of the problem over at Facebook, Katie.
All right, yeah, could be one of them. Pretty much not much to speak about when it comes to this market right now. The S&P 500 higher by about 0.1%. We know it's a big week to come, but you're not exactly seeing it play out at the index level right now. A lot more interesting movers under the surface. We know that healthcare in a lot of focus today. GoodRx up by the most in quite a while, up about 30%. And coming up, Texas continues to be in the midst of a real estate boom. We'll speak with one of the people at the helm, Ari Rastegar. He is Rastegar Capital CEO. He joins us next. This is Open Interest.
So you see financial services in Dallas-Fort Worth, you see tech in Austin, so massive companies like Oracle and Apple that have built tremendous infrastructure there. So when we're hiring people, we can always hire in Dallas and Austin. Houston, we have to hire another 1,000 people in all of our businesses every year, and Texas is a great pool of human resource.
That was Fernando de Leon, founder and CEO of Leon Capital Group, speaking to Bloomberg earlier this month. Joining us now to talk more about the business in that state and really nationwide is Ari Rastegar. Rastegar Capital CEO. He's one of Austin's most prominent real estate developers. And really, you're nationwide, Ari, because last time you were on, we were talking about different projects you were doing in different states. But Texas is your home base, right? And it's been so popular to talk about because of Y'all Street and also on the downside because of the infrastructure issues. How's it feeling right now as the lawmakers return home, reportedly, to vote on some aid?
Well, I'll tell you, it feels a little bit like you're walking in the dark and you're kind of looking around, trying to see where everything is, because the amount of uncertainty that we're seeing throughout the markets, I think, is what's causing most of the issues. Clearly, there's a lot of exuberance, a lot of excitement. Tesla did that huge deal with Samsung that'll buy $16 billion in chips, for the next 10 years or so. Elon got a big pay package to keep him at Tesla, and Tesla being an Austin-based, company. There's a lot of things that are really fueling the excitement. We're starting to see the inventory really absorb. Austin actually leads the country in net absorption. And so there's a lot of other issues that I think are making people uncomfortable with where rates are. The Jackson Hole summit that I think will be the chairman's most important speech maybe of his entire tenure. Right?
That's a big call. Why do you say that? Because a lot of folks are saying he's not going to rock the boat too much.
Well, I think it's the most important because we have a few things that are happening here. One is the president pressuring the chairman to lower rates. Let's talk about that for a second. If we lower the Fed rate from 4% down to 0, well, what's going to happen on the other end with tariff inflation pressure is the 10-year is going to go up. So having a short-term solution that sounds real nice, but the real homeowners and the mortgages with $10 trillion of mortgages that are based on the 30-year, the benchmark is the 10-year Treasury. Mm-hmm. So really bringing those rates down with the tariff pressure is a little bit of a difficult slot to navigate. Clearly, inflation was high. The Fed had to give some medicine, but now consumers are choking on that medicine. So it's one of those situations where both options have their complexities. And I think actually what's happening with Freddie Mac and Fannie Mae in terms of this secondary offering, so to speak, could be very interesting because if you bring the $191 billion that we put in initially, it's been paid back in dividends several times over. So if it does come and allows global investors to participate, I think that liquidity will actually help temper where the 30-year mortgages are, which will be desperate relief to the affordability that's in the housing. So it's one of those situations where you pull one thing, it's causing all these other issues that seem like they're unrelated, but they're certainly correlated.
Do you see that happening soon, and would you be an investor in Fannie and Freddie?
I think that I am an investor in Fannie and Freddie because of the loans that they write to us all the time in some regard. I think most importantly, as an investor, if I was really looking at a larger asset allocation, and there's a bunch of hedge fund guys much smarter than me to do that, I think it's actually a tremendous opportunity because if it was, let's say, an IPO per se, it would be bigger than Saudi Aramco. That's one. Two, it would allow international investors to participate in the American dream. So I think that's really the part that's interesting. If this was a banner and this was, publicity, say, look, how do I participate in the American dream if I'm living in XYZ country? Buy Fannie and Freddie's secondary.
Secondary, not an IPO, as Matt Miller.
It is not an IPO. Everyone says
IPO.
Initial public offering, but you can see that the shares, look, right there, they're trading currently. So
there you go. I do want to go back to Austin because you mentioned that when you're talking about the supply picture. Rents have actually been cooling in Austin.
They have.
You can't say that about many other hot cities in the country right now. How do you approach that as a builder? Is that a market where you would still want to build more? Does that make sense?
Yes, it does. And it absolutely does. In fact, we have close to 1,000 new multis in some level of pre-production now, another 1,000 houses that we're building within the Austin submarket. And I think talking about a city in an isolated setting like Austin is such a big statement. Clearly, New York is a much more exaggerated version of that, but what happens on one block is not what's happening on another block. For example, JP Morgan just opened their $3 billion office tower, and I saw some headlines saying, oh, this is the rebirth of the office market. No, it's a $3 billion tower that was built to suit, that had the tenant already in place. There's no speculation, right? So I think it's about a deal-by-deal basis more than anything. And the thing that concerns me about Austin is actually a more global issue of the $1.2 trillion in loans that were written at 3% that are about to hit a wall over the next 18 months in a 7% interest rate environment. So the reverberations of those type of movements, I think, are going to have effects on cities that aren't directly correlated to the nature of that city itself. Yes, rents have cooled a little bit in Austin, absolutely, but that's tempered by the exuberance that threw them to the roof too high artificially when all the people from COVID started to move in. But the economy as a whole, with the size of Apple's office, Tesla's office, Oracle's office, the deals that are being transacted with Samsung, which is in Taylor, these are battleship movements that just can't be course corrected like a little speedboat.
What people talk about Texas all the time. What about the neighboring sort of sand states, Arizona, Nevada? Where else are you most interested?
Nevada's, I think, a great market. I think Las Vegas is going to continue to grow at an alarming rate. My kids were actually just there recently and went to the Sphere and saw this, just all the great things that are happening in that city. And I think it's going to continue to grow. That market for us, we haven't participated in it too much other than some self-storage. But in this particular market, I think necessity-based real estate is really where a lot of focus should be. And I think you're going to see a big resurgence in storage, in medical, and contrary to popular belief, the CPI is made up of 35% shelter. And so what we see in housing, and back to that Fannie Freddie discussion, I think are going to have reverberations through the entire economy much bigger than is being reported.
And Phoenix, I
like Phoenix, but I'm biased. We have an incredible site in downtown close to ASU, and we're looking to buy a bunch of other stuff in the Opportunity Zone throughout the Phoenix market. And to say that it's hot, I think is...
It's literally hot, but also obviously you've got college-age kids flooding in there. You've got retirees flooding in there. So it's really spans the spectrum.
I think you're exactly right.
All right, well, that's a good place to leave it then. Ari, great to get some time with you. Really appreciate you making the visit to our studios. That is Ari Rastegar. He is the CEO of Rastegar Capital. Meanwhile, let's get a check on these markets right now. Uninspired trade, unchanged on the S&P 500, pretty much unchanged when it comes to the NASDAQ 100. The bond market not doing much. Let's get to some of the action going on at the single stock level this hour with Bloomberg cross-asset reporter Denisa Sekova.
Let's start with one of the big gainers. United Health is up almost 4%, and this comes after a super strong rally, 12% on Friday. Of course, it's coming off the news that Warren Buffett and many wealth managers are taking shares in the company. Shares were under a lot of pressure this year, down 46% before this. The company's contending with softening result and federal probe. We had their earnings recently, and guidance was lower than what previously they gave, and all the stats were lower than what the streets were expecting. A lot of pressure there. That said, Berkshire Hathaway took in 5 million of shares. There were other families' offices like David Tepper taking a stake there, and we've seen a big boost. That says the company is still down significantly year to date, but some relief we're seeing this in last week. One name that got a good upgrade today, Duolingo. It was actually upgraded to overwhelmed a key bank, but we're seeing not much relief in the stock. It was up in earlier trading. The Duolingo is moving beyond language learning. We're seeing chess, we're seeing music gaming, and there is a lot of optimism from analysts. We also saw Citi putting a buy target, but that said, the company is flat year to date, so some pressure there. Oil stocks are seeing really a big downgrade today from Morgan Stanley, and we're seeing big reactions. If we look at Occidental Petroleum, Ovintiv, Northern Oil and Gas, they're all down today. Analysts see downside risk to crude prices in the second half, and of course, seasonal tailwinds. They see a winner here. Gas producers more attractive with recent stockpiles pullback, and those names are potentially some gainers as oil stocks are falling. Matt and Katie, back to you.
All right, Danita, thanks very much. Bloomberg's Danita Tekova from our cross-asset team. Coming up, retailers are expected to sound caution as they brace for fallout from President Trump's tariffs. We'll speak with Joe Feldman, Telsey senior research analyst, next. This is Bloomberg Open Interest.
Welcome back to Open Interest. Let's talk a little bit more about this week's retail earnings because we have heavy hitters, including Home Depot, Target, Lowe's, and Walmart, all reporting earnings this week. Let's preview some of the big ones with Joe Feldman. He is Telsey Senior Research Analyst and Assistant Director of Research. Joe, great to have you with us. We have to start with Walmart. Of course, it takes the stage on Thursday. I know that you have an overweight rating on this company. What's your expectation as we count down to these numbers?
Well, we think Walmart's going to put up some pretty good numbers. We think sales trends have been strong. We've seen the trade down effect where people have been shopping, for value at a much higher level than they have in the past. And so you're even seeing that more affluent consumer trade down to Walmart. Their e-commerce business has been very good. The grocery business is very good. We think discretionary is starting to see a little bit of life as people pick up some value-oriented goods, especially with a decent back-to-school season so far. So Walmart should sound pretty good. I guess the concern we have is really what the back half's going to look like and what they're going to say about tariffs and the impact and fourth quarter effects in particular.
So what do you expect on that front? I mean, not just from Walmart, but Target, Home Depot, Lowe's. I mean, which one's most sensitive to tariffs?
Yeah, well, Target is definitely the most sensitive, probably within that group. Walmart, Home Depot, Lowe's all have a very large domestic base. So about 2/3 of what they buy is domestic anyway. And, beyond that, you're going to see some pressure. The discretionary goods is really where you see more of that tariff pressure. But broadly speaking, you're going to have a twofold effect. One is the cost side that I'm just mentioning. The other part of it, though, is on the retail side, the spending side. Will the consumer be able to spend as prices go up? Every retailer Dana and I talk to tell us that they're going to see price increases as this year progresses. And we may see a lot of it hitting in the fourth quarter. So the nominal numbers may look okay, but the unit numbers, I think, are going to be challenged come fourth quarter.
Interesting context there that we're certainly not out of the woods yet. Let's talk a little bit more about Walmart when it comes to grocery, though. This is something that Matt and I were speaking about with our reporters that, okay, maybe you're going to see costs rise, but Walmart has much more than discretionary items. And I know, Joe, that you're expecting Walmart to actually post share gains when it comes to grocery.
That's right. We've seen pretty consistent trends there for Walmart for the past couple of years, really. Walmart continues to offer the lowest prices in the market. We do our price checks every month, every 2 months or so, and their grocery prices are always about the best. They've been the leader for a very long time, and that's a big driver. And then when you lay in consumers a little bit more affluent starting to do buy online, pick up at store or delivery, especially in the grocery side, Walmart has been a big winner there. And Walmart has captured that customer through their Walmart Plus membership program. And we think that that's going to be another big win to help drive those share gains. We think it's coming at the expense more of regionals and smaller players. All the big guys are doing a pretty good job. They all have very effective pricing and promotional power. I'm talking, Kroger, Albertsons, Costco, Walmart, Target even, they do a pretty good job on that front. And then there's Amazon too, which is keeping everybody honest here and helping push Walmart to be even better. And I think that there's room for all those big guys to keep gobbling up some market share from some of the smaller guys.
You're not worried that Amazon is going to take away business from everyone else? I mean, Katie hasn't gone to a grocery store in like 6 years, right? She orders everything online. So
it's not strictly true, but the point.
I'm exaggerating.
Holds.
Well, there are some people that have made that move, but for the most part, people are still leveraging their physical footprint in the physical store. And one of Walmart's key strengths is the fact that they've got over 4,000 stores in everybody's neighborhood. And it's within a 10-minute drive. So whether you're driving to work, driving kids to the soccer field, or wherever it may be, you have an opportunity to do a buy online pickup at Walmart. Walmart's also getting much better with same day and next day delivery, and they're leveraging technology and AI to do that. So I think they're going to be able to compete very effectively, and already are competing very effectively with Amazon. Amazon definitely upped the game, and I think that again puts pressure on the smaller regional players that don't have the balance sheets and the infrastructure to be able to invest in such a way that can really help to offset some of the pressures that they see from Walmart, Amazon, and others.
Well, I want to keep talking about groceries, actually, because you talk about Amazon upping the game. You think about the news that we got last week that they're going to expand their same-day fresh grocery delivery in about 1,000 U.S. cities. You saw the share reaction in companies such as Kroger's, which I know that you cover, and I know that you have an overweight rating on that company in particular. I mean, how is that going to just shift the landscape once again?
Yeah, I think it keeps, Kroger has done a very good job as well with their own last mile delivery services and buy online pickup in store. They have a relationship with Ocado, and they have these big distribution centers that are near the stores to help with fulfillment and do it more efficiently. So there is definitely more pressure there, and I could see that pressure is going to be there. I think Walmart, Kroger, Albertsons, all these guys have anticipated this, and they know that's kind of the direction that we're headed, and they know that they need to be more efficient and more fluid with their grocery pickup and delivery, and just make it easy for the consumer. So I think it depends on the scenario too. A lot of people still like to do their perishable goods in person at the store. They like to select their fruit. They like to select the meat that they're buying rather than have someone do it for them. Now, as long as Amazon and others can continue to do a good job and present good product in the basket, they'll still, capture market share from others. But that's a big if. We need to see Amazon do that effectively and efficiently every day. We're seeing that from others. We do see that, at the Whole Food side of the business that Amazon has, they do a very good job already. So they have some learnings there. But I think Kroger, Walmart, they can compete. I mean, they're already competing. And again, they can leverage their physical footprint to do that.
All right, I have a million more questions, but
we're
going to let Joe. We're going to let Joe go. I can't wait to get to Home Depot and Lowe's, Joe, and talk about the differences between those two companies, or the differences between Target and Walmart. We'll get to that with you some other time. Joe Feldman there of Telsey, really appreciate your intel. I'm off to anchor Bloomberg Tech for the next hour.
Somehow Ed and Caroline are both off.
Yeah.
Yeah, I'll miss
Sometimes
you.
that happens, you know, but I'm
allowed.
excited about technology as well.
I wish you were staying here because we have a great conversation coming up about President Trump. He will host President Zelensky and several European leaders to set out terms for a potential peace deal with Russia.
I'm sorry to miss that.
We'll explain what's at stake, or at least I will. This is Open Interest.
I believe we had a very productive meeting. There were many, many points that we agreed on, I would say, a couple of big ones that we haven't quite gotten there. So there's no deal until there's a deal.
We agreed to robust security guarantees that I would describe as game-changing.
This is not our war. We happen to be in the role of the only country in the world, we're the only leader in the world, that can actually bring Putin to a table to even discuss these things.
That was President Trump and members of his administration speaking over the weekend. And this afternoon, leaders from Europe and Ukraine will meet at the White House to discuss a peace plan with Russia. Bloomberg State Department and foreign policy reporter Eric Martin joins us now from Washington. And Eric, it feels like the whole world is awaiting specifics from what actually happened in Alaska. Can we expect to get those details today?
That's absolutely right, Katie. We're looking ahead at a historic day here in Washington. So many leaders from Europe who are here, and a lot of interest in particular in something that Trump's envoy Steve Witkoff said yesterday, which was to talk about the idea of Article 5, like security guarantees for Ukraine and what that would look like, what U.S. involvement in that would look like. Because with President Trump, we have someone who campaigned on ending forever wars, on pulling back the U.S. commitment of soldiers and personnel overseas. So seeing exactly what the Article 5-like commitment, of course, Article 5, the part of NATO that says an attack on one is attack on all, and seeing what that kind of commitment with U.S. involvement would look like, that's one thing that a lot of the leaders who are here today are interested in hearing details on.
So security commitments, a big topic of discussion. One of the other big topics of discussion, I have to imagine, Eric, will be conversations around concessions when it comes to territory that has been seized by Russia as well.
That's absolutely right, Katie. We have seen there's been some reporting coming out over the weekend and in recent days from Europe, from President Trump's call with European leaders, suggesting that somehow Russia could maintain control of the Donbas, of Luhansk and Donetsk, and as well as Crimea, areas that it already controls, but also potentially negotiating for Russia to take control of areas it doesn't fully control, things that currently represent the front line of the war. And a lot of concern in Europe about what that would mean. And when I speak to analysts over the weekend, a lot of concern that that would look something like a type of surrender. If after these 3 years, now in the 4th year, if Russia maintains control and meets all of Vladimir Putin's goals, essentially, in terms of territory, then what has Ukraine's fight been for? That is a big political question for President Zelensky.
All right, well, we might start to answer it this afternoon. Eric, really appreciate your reporting. A busy day ahead. That is Bloomberg's Eric Martin joining us from Washington. Meanwhile, check on these markets right now. You can see not too much action at the benchmark level. We've been saying that for the past 2 hours. The S&P 500 pretty much unchanged, but very close to all-time highs after 2 straight weeks of gains. A similar story when it comes to the NASDAQ 100, a little bit lower on the day. And you can see that the bond market very well behaved right now. The 10-year Treasury yield higher by just about 2 basis points. Now, coming up tomorrow, we're joined by Morgan Stanley's Andrew Sliman, as well as Raquel Odin from HSBC. We'll see you then. This is Bloomberg.